Welcome to TARTLEcast with your hosts Alexander McCaig and Jason Rigby, where humanity steps into the future and source data defines the path.
You want to open it up?
Yeah, I want to get into a little bit of cryptocurrency, blockchain, because we're doing these data news. So something new just happened, and we're seeing development of cryptocurrency being like this weird, these guys, and they had these weird rooms, and they're mining, and and they got little glasses, and everybody laughed about it.
Yeah.
But now when we're seeing decentralization and blockchain, this was interesting, and I want you to speak to this. You can now trade high demand stocks like Tesla, Apple, and Amazon represented by tokens on the FTX derivative exchange. Through its fractional stock offerings, 12 equity and cryptocurrency pairs will be offered, allowing users to trade tokenized fractions of stocks, seemingly up to a half a stock at a time, against Bitcoin and stable coins.
Yeah. So,
because I want people to understand is you're taking a hard asset. I mean, stocks. That's been since when the stock market 1908. Who knows?
Early times. Yeah. That's actually where fast food started. But let's keep going.
And now they're recognizing this.
Yeah.
And saying, okay, there's value in this.
So fractional ownership is a funny thing. Mm-hmm. So let's kind of get into that with the financial part of it. The idea is that if you want to own a stock, okay, it's going to cost you maybe $200 to own a stock. I don't have $200.
Right.
I want to be a part of the company.
Right.
But I can't afford one stock. Oh, but wait a minute. The collective power of a lot of people could own a stock. So what if we fractionalize the ownership? What if we have a way to be like, okay, maybe I'm going to come in as the company, a large market maker, and I'm going to buy the stock, and I'll say, I'll divide it up amongst my shareholders. You own this function, this piece, this piece, this piece, this piece. And the tokenization is something that, FINRA, SEC, all the financial regulatory bodies have been like, whoa, slow down with the tokenization of assets. Because when you tokenize an asset, you decentralize it. Mm. So now no centralized authority is actually keeping and maintaining the record of the ownership of that asset. It's actually managed by a blockchain. So that means you have a series of encrypted hashes that are coming together. And so it's I own this hash, which is 1/10 of the stock.
Right.
And this other guy owns this hash, which is, 1/2 of the stock because he could afford that much. And so all these people come together on the hash owning a part of this coin.
Right.
Right. And so they can take that and then they can hedge the risk against other stable cryptocurrencies on their own blockchains.
Yes.
Okay. So what they're trying to do is the group of us, decentralized, can own an asset, a hard asset run by a central agency, and then we'll disseminate the ownership, and then we'll hedge the risk of that ownership against other cryptocurrencies, which are now readily adopted by hedge funds, certain mutual funds, Fidelity, all those different things. So now we can have an applied value to actually measure against that. So that means if we do have a loss on our ICO, we can then take the differential on our hedge that was gained from the cryptocurrency on the other side. I'm trying to explain finance, it's not very simply, but it's like a scale, right? As one goes down, the value of the other one goes up. So if our coin offering fails on buying these stocks, split ownerships, decentralized, I'll take the value of my Bitcoin over here and swap it out. And people are okay having that hedge put in place.
Yeah, I think because they like the stability of having Tesla, Apple, Amazon, those.
Yeah. They want the blue chip boys.
Right.
Okay. But they also want to get it in a decentralized format.
Right.
But the government, financial regulators want to know who owns it.
Yes.
But when you decentralize it, we're like, holy crap, 300 people own one thing now.
But what I thought was interesting is that we're approaching this, and we're approaching it kind of rapidly. I was sharing with you off air, a lot of hedge funds this year to make up the losses that they've had, is buying Bitcoin. And so now it's over 14,000.
At first, they didn't want to touch it. Buffett's coming out saying it's useless, it's garbage, it's no real thing. All these people are like huge advocates against it.
Right.
That should be your first contrarian red flag that these people are dinosaurs.
Right.
And they're not ready to adopt something that financially empowers the globe and actually elevates finance. They didn't see the value in it because they're so blinded by a system they've been winning in for so long.
Yes.
And so when you transition that power from the few back to the many, of course they're going to fight that.
Yes.
And now the hedge funds are like, crap, we should have just gone with what the people were doing.
Yeah,
Look at the value in this.
And it's funny, CoinsDesk Sebastian Sinclair, he reports that the product is conducted in partnership with capital market solution provider, Digital Assets AG, and investment firm, CM Equity. FTX calls it a first of its kind product.
Well, it is a first of its kind. Well, actually, it's not. So they've taken old models of financial technology,
right,
certain swaps, hedging techniques, and what they've done is they've just applied it towards cryptocurrencies. They haven't invented anything new. They've reinvented something.
Yes.
It's not something that's truly unique. They've just applied old models, and now they're moving finance really in an abrasive way, in a decentralized system. And I've spoken with FINRA, FinSec, and the SEC, right? I've spoken with their legal groups and their, whoever was running the cryptocurrency divisions. They're trying to catch up.
Yes.
Because it's now in a digital format and it's so decentralized and there's so much societal value, people say that's worth this much. They need to catch up on the regulation, and they're slow to get there.
Right.
And so all these things are happening, and they're like, man, the way this is, it's at a rate that we honestly can't handle right now. What the government is feeling, regulators, is that they're losing their grip.
Yes.
They don't have the grip anymore.
No pun intended.
Yeah, no pun intended. It is now, the power legitimately goes back into the hands of an individual in these decentralized systems. So there's a lot of beauty about giving decentralized finance what it truly needs. It actually affords everybody to be a part of the system.
Right.
It's not just people that have had the resources and everybody else gets redlined.
Yeah, like right now you can buy Bitcoin 24/7.
If I want to be a part
you can
of
buy fractional shares of Bitcoin. You don't have $14,000, you have $2, you can go in there and buy $2.
Yeah, you can.
The market is open 24/7.
Well, yeah, you don't have to buy a whole Bitcoin. You can get little pieces of it.
So they said they were the first of their kind, but I want to talk about TARTLE being the first of its kind.
Yeah.
With how it's using Bitcoin with data exchange, whether you're purchasing data or selling data.
Yeah, I don't want to sound like we're tooting our horn, but it is our channel. You know what I mean? Right. So we are the first of our kind for data.
Right.
No one ever anywhere has allowed people to control the things that they are creating and retain 100% of the value for it and be able to share it. In any sort of digital medium, that's never happened before. And we opened up the availability of that value to everyone across the globe.
I love that.
By choosing a decentralized currency, a digital currency, because if a digital currency can be transacted on my cell phone and I don't have to go to a bank, that opens up the body of people that can actually adapt and adopt to a system like we have very efficiently, outside of what their governments or their regulations are saying that have naturally and unfairly prevented these people from, operating in.
Because it's so interesting whether you want to buy art or you want to buy a house. You have the opportunity right now, if somebody will take it, to just go right to that person and purchase Bitcoin and claim. I mean, think about that. How many people get involved when you purchase a home?
Too many.
Yes.
And so now you can have a direct person-to-person transaction, and people are worried about the record of the transaction, the record of ownership.
Right.
And so what we're saying, okay, we'll give the deed. Here's the deed, but the city will hold on to that record. What's the point of that?
Yes.
We have all these decentralized systems that can come together and manage the smart asset as a smart contract to actually watch the history of how that hash has been transacted. We know exactly who owns it.
Yeah, we don't have to go to City Hall.
We don't need a centralized authority to do it. We don't need
a file
an inefficient
to get
system.
an old map and look it up and see what records were signed on it.
And so is
there a tax lien?
They're wigging out.
Yes.
Because, these fantastic decentralized technologies are driving us in a direction of our own sovereign control of things we should have been in control of in the first place.
Because you don't need a mortgage company.
No.
You don't need a title company.
No.
You don't need a realtor.
No.
What else is involved? I mean, there's so many different agencies that are involved.
Sometimes lawyers.
Yeah. Lawyers, real estate lawyer. Yeah, you don't need any of that.
I don't need to go to the city for any special permit.
No.
You know, I'm going to sell it on my own time.
Yes.
Okay, and here's the record. And if you want to follow the record, go into the blockchain and see who's bought it.
Yes.
See what IP address it came from.
And it is more safe. It is more safe than it's sitting in City Hall.
City Hall can burn down.
Yes.
the likelihood of all the computers burning down is much less. Okay.
Yeah.
All the nodes that support
Yes.
this blockchain system is much less. Unless there was a massive coronal ejection out of the sun, which is like a huge pulse,
Right.
like a big solar flare, that would wipe out most of the computers.
Yeah, but don't they have those like protected wallets and stuff you can put your Bitcoin on?
Not against
Those
something like that.
Yeah.
That sends neutrinos. It's just blasting through your body. It shuts stuff down. But that's the likelihood of that happening is
I will
so
take
slim.
that sun
I'll absorb the sun.
and I will shine like a.
Shine like a diamond. Shine bright like a diamond. Yeah.
We got to throw Katy Perry if we're talking about decentralization.
Yeah. Shout out to Katy Perry and decentralization. But yeah. So anyway, that's the gist of it. Now I'm all fired up.
Oh, that's good. Thanks, Alex.
Cool deal. ICO.
Thank you for listening to TARTLEcast with your hosts Alexander McCaig and Jason Rigby, where humanity steps into the future and source data defines the path. What's your data worth?
I would love to.